Welcome to Fear and Greed, the week ahead. This is where we take a look at the big events, reports and releases coming up this week that give insight into the economy and a look back at what happened last week too. I'm Sean Aylmer, and every Monday I'm joined for the week ahead by economist Stephen Koukoulas. You'll find him at thekouk.com, thekouk.com, and on Twitter using the handle thekouk. Stephen, good morning.
Good morning, Sean.
I spoke to you during the week and I actually called you Kouk, and I don't not think that I normally call you Kouk. I normally call you Stephen, but then it just occurred to me that when you spell out THEKOUK so often, I'm going to start calling you Kouk now. You know that.
That's right. A lot of people do, and I've been called worse.
Stephen, the last week, we had a sort of interesting week in financial markets in many ways, although on the economics front there was perhaps a little less interest. The RBA board minutes, not anything there. I mean, I suppose people read into that there's still uncertainty about what the bank's going to do.
Yeah, there is indeed. And I think the critical thing from the board minutes is that, a week is a long time in economics, I can assure you, that a lot of people sort of read them with interest and saying that the bank is optimistic about, or they were optimistic about the outlook for the economy. The growth was still continuing. The labour market was continuing to improve as well. But they put in there a couple of sentences, as they have for the last 18 months. Of course, the uncertainty around COVID is the biggest issue for them, or one of the big issues for them. And lo and behold, in this last few weeks, the escalation of the lockdowns in New South Wales, Victoria, South Australia now has called off just about every person's forecast from a month ago. And the good news that was there on the economy, I was actually listening back to a couple of our podcasts of a month or so ago, and we were really upbeat, and rightly so. Now you've got the army of bank economists forecasting a negative quarter for September quarter GDP, because these lockdowns are happening right now. And there's a question of, well, how much will GDP fall? And then will we get a rebound in the December quarter? And the jury's out on that, to be frank.
What else last week? There was international trade figures, another huge surplus.
Oh, another absolutely fabulous surplus. Again, it looks to be driven by resources. The iron ore price, while it's a bit choppy, just literally in the latter part of last week, it's still well above $200 a tonne. The surplus, not seasonally adjusted, was about $13 billion for a month. So that is providing a real lifebuoy, I suppose, for our economy when we've got these COVID things unfolding.
Yeah, I mean, you mentioned it a moment ago that there really is a sense at the moment, and kind of by the end of last week, that the V-shaped recovery wasn't happening. Hopefully it won't be a W-shaped recovery. But there really was just, I don't know, it was like a cloud hanging over everyone's forecasts.
Yes, and I think that was the issue. And the really clever economists out there who do have what we might call micro data, they have weekly data on credit card turnover and their internal balance sheet. They can sort of see what's happening, and they're all detecting the New South Wales economy in particular has hit a brick wall with the lockdowns that are occurring now, the construction sector, closing, or isn't it closing, these sorts of things. So, and again, we have, unfortunately, the experience of 2020 when we had lockdowns in the June quarter predominantly, and we know GDP fell 7% in that quarter. Now, nobody's going that far because, of course, it's not quite as extreme as that. But, I've seen many people putting out forecasts, the Westpacs, the NAB, CBA, really, really good people, suggesting that GDP could be -1.5% for the September quarter. And whether that's a W is unclear, because again, as we just mentioned, that bounce back in the December quarter is going to be really much predicated on lockdowns ending and us getting back to normal business, which of course is still a huge amount of uncertainty around that.
Well, that's last week. We'll be back in a moment and get into the week ahead. I'm with economist Stephen Koukoulas, aka the Kouk. Stephen, the big one this week, of course, is inflation data.
Oh, yes, we've been waiting for this, and Australia's one of the few countries that doesn't have monthly inflation, so we've got to wait 3 months to get our inflation updates. And I think, as we discussed recently as well, the US inflation rate has accelerated. Their monthly run rate, if you like, on inflation saw it spike above 5%. Now, in Australia, our June quarter CPI, the headline figure, will be around about 0.7, 0.8 for the quarter, and just under 4% for the annual figure. So 4%, wow. You might think that's a bit of a problem, but I think we've got to just take a bit of a chill pill on that one, because a lot of the effect is a base effect. So this time last year, prices of things like childcare fell to zero. So there's a bit of a statistical quirk in those headline numbers. That said, if we look at what what matters, and that's the underlying inflation, the trimmed mean and these sorts of core measures of inflation in Australia, they will show a pickup in inflation, probably a 0.5, 0.6 for the quarter. Annual inflation picking up to about 1.6, 1.7, still below the target, but maybe there was in the June quarter just a bit of inflation momentum. That'll be really interesting to sort of just see whether the RBA has got any hope of getting inflation to within the band in the next year or two, which of course it hopes to do.
So, just recapping that, so the transitory effect will wash itself out potentially in the current quarter or in the December quarter for sure. Is that right?
Yes, that's right. And I think once we get the September-December quarter numbers, the headline figure will drop to about 2.5%. We've got to remember too that the petrol price is elevated at the moment, and that feeds into headline CPI more than underlying inflation. And then the critical issue will be, well, what is happening to these underlying measures? Are they getting back to 2%, which would be nice? Hasn't been there for quite a while, but still a long way from even the midpoint of the 2 to 3 target band.
Yeah, and the bank has said that it needs to be sustainably within that target band, and wages have to be growing sustainably at a certain pace before they'll do anything on rates.
Correct. And they've made that very clear for the last few months. And, a few of us have got quite excited when we saw a sub 5% unemployment rate and the anecdotes of skill shortages occurring quite rapidly around the economy. Thought, well, gee, this is it. This is the pickup that we've been hoping to see in terms of wages growth and, of course, inflation. But, the bank's made it very clear. And, again, this was in the minutes that were out last week, that the RBA is saying that they want to see not just a quarter or two of inflation and wages picking up. They want to see it entrenched. They want to see an acceleration to the upper part of the band of the inflation target. And they want to see wages with a 3 handle on it. So annual wages growth at or above 3%. Currently, they're running around about 2%.
Okay, and then also this week we've got credit data, and also Guy Debelle, the Deputy Governor of the Reserve Bank, he's speaking too.
Yeah, something for us to look at. The credit numbers they're always semi-important, I suppose. The interesting thing there will be housing credit. We know the housing market was running along at a great rate of knots. So we're probably going to see the housing credit picking up again. The interest is always whether it's owner-occupiers or investors. Until very recently, investors have been on the sidelines a bit. So maybe they're starting to get back into the market. And, of course, Deputy Governor Guy Debelle giving a talk. Not quite sure what he's going to be talking about other than perhaps highlighting some of the risks to their forecasts. And with this COVID lockdown impacting, what their forecasts were a couple of months ago, and remembering just in a week or two, they've got their statement on monetary policy coming out in early August. So that will be perhaps a bit of a precursor to what they're thinking of where unemployment, inflation and wages, as we've just been discussing, are likely to go. Are they going to be materially adjusting those forecasts? Always interesting to hear what the RBA is saying.
For the next 2 weeks, Stephen, do you give up the horse racing for the Olympics? We had a good start on the weekend. Will you be watching a lot of it?
I'm addicted to all these wonderful things. And, a couple of early wins late last week in the soccer, the softball, the men's and women's, and, the swimming's absolutely fabulous. I'll be watching it all still. And in between that, just keeping a bit of an eye on what's happening at Rose Hill and down at Flemington.
Fantastic.
The TV channel will be changing all the time. It'll be hard to keep up.
Thanks, Stephen. Have a great week.
Thank you, Sean. See you, mate.
That was economist Stephen Koukoulas, better known as The Kook. You can find him at thekook.com and follow him on Twitter using the handle TheKook. I'm Sean Aylmer, and this is Fear and Greed, the week ahead.